Gold trading has been popular for centuries, but how does a novice investor get started? Stick around to discover our top 3 gold trading strategies every beginner should know. Take a dive into the world of gold trading with our recommended strategies specifically tailored for novice traders. Understanding the market is crucial before placing any trades, so let's get started. Entering the gold market can be daunting for new traders. One of the biggest challenges is understanding the constant price fluctuations and identifying market trends. With so much information out there, it can be overwhelming to know where to begin. But don't worry, we're here to simplify things for you. First, let's talk about the basics of gold trading. 2 main methods are fundamental and technical analysis. Fundamental analysis involves looking at economic indicators, geopolitical events, and supply and demand factors that influence gold prices. On the other hand, technical analysis focuses on chart patterns, historical data, and market trends to predict future price movements. Both methods are essential to understand to develop a well-rounded trading strategy where you invest in gold. Now, let's dive into the 3 key strategies that can help you get started. 1. Crossover strategy. This involves using moving averages to identify potential buy or sell signals. For example, when a short-term moving average crosses above a long-term moving average, it may indicate a buying opportunity. Pros: simple to understand and implement. Cons: can give false signals in volatile markets. 2. Fibonacci Retracement Strategy. This technique uses Fibonacci levels to identify potential support and resistance levels. Traders use these levels to predict possible price reversals. Pros: helps in identifying precise entry and exit points. Cons: requires a good understanding of charting tools. 3. Trading economic news. Gold prices often react to economic news, such as interest rate changes, inflation reports, and employment data. By staying informed, traders can anticipate market movements. Pros: provides opportunities to capitalize on market volatility. Cons: requires constant monitoring of news and quick decision-making. Remember, risk management is key. Use tools like stop-loss orders and diversify your portfolio to manage potential losses. Almost all Forex CFDs brokers offer gold as an instrument to trade. Look out for its 3-letter code XAU. XAU is often used to denote the price of gold or gold-related financial instruments, such as gold futures contracts or exchange-traded funds, ETFs, that track the price of gold. Your broker should provide a stable platform, backed up with solid regulation. Check the leverage and margin requirements for gold as these vary per broker and based on where you live. Check for any hidden costs or fees in the client agreements. To wrap up, we've discussed the crossover strategy, Fibonacci retracement strategy, and trading economic news as essential approaches for novice gold traders. Remember, education and practice are vital to success in gold trading. Thanks for watching. If you found this video helpful, give it a thumbs up and share your experiences in the comments below. Don't forget to subscribe to our channel for more tips and strategies on gold trading.